5 financial skills everyone should know in 2021. 5 basic financial skills you must know about financial skills. Here we talk a lot about the stock market. Here we analyze stocks and we try to find out where the market is going. All of this is important. Start your journey to get the finances independence requires you to master basic money skills first in order to improve yours literature. For some reason, a lot of people believe that they know just because they have money to spend how to deal with what is not the case. Managing money is an art. The reason a company like Apple has been so successful is because it has a team of amazing accountants who played around with tax regulations to keep most of it what the Apple does to the Apple so that it can continue to invest in itself to keep producing innovative products. And it's not just Apple. The one of President of the United States has avoided taxes for years. Despite his fortune of $3.5 billion, the president only deposited $750 taxes in 2017 and had completely avoided taxes in many previous years. We are not going to delve into accounting skills and the methods they use to avoid taxes because we covered it in one of the videos above, the link of which I will leave in the description. However, we're going to highlight some basic financial skills that you should know about. In fact, they are so important that everyone should know about them. Number 1. Active against liability. If you've read the book Rich Dad Poor Dad, the main idea the author tries is reaching your target audience is the difference between assets and liabilities. The reason so many people struggle financially is because they don't understand the difference between assets and liabilities. An asset is anything that has money in your pocket, while a liability is anything that takes money out of your pocket. The concept seems so simple, but most people get it wrong. People buy houses, cars thinking they are acquiring assets when in reality are not. When you buy a home, you have to pay taxes, utilities, insurance, etc. He's constantly pulling money out of his pocket, which means he's unstable. Your car is also a liability. You have to buy fuel, pay for insurance, maintenance, etc. However, if you rent this car and make more money on it than necessary, it will an active one. The same goes for a house. If you rent it and after deducting all expenses and it ends up generating income, then it's an asset. The rich buy assets, the poor buy liabilities, and the middle class buy liabilities that they think they are active. 2. Taxes are one of the most complicated things out there, and it's no accident. They are meant to be complicated so that the average person will not understand them. The tax code is written by the rich to keep them rich. On paper it seems that tax rates are high for the rich. In reality, for the rich, people pay a small amount or, in some cases, almost nothing in taxes. Corporate taxes in the US were around 39% for Obama, but nobody really paid that. A lot of. In fact, sometimes they didn't pay anything. When you pay taxes, you pay a fixed percentage based on your income, but when a company pays taxes, subtract your expenses first and only pay taxes on your net income. And that means a company can have as many expenses as it wants. A rich person does not pay to live in abundance, but uses corporate funds to cover their expenses. And you write them off as a business expense and end up paying lower taxes. Many rich people run their businesses at a loss in order to keep paying for their luxurious lives, and avoid taxes at the same time. Indeed, even if you end up making a profit, you can carry your losses over to future years, you can deduct last year's losses and still avoid taxes. When politicians say we are going to raise taxes on the rich, they are not referring to the ultra-rich, who make billions, but the middle class who make more than $500,000. Given that $500,000 is taxed on income tax, it's the highest rate in almost any country. If you don't master taxes, even if you end up making millions, you will pay a lot part of it to Uncle Sam. 3. It doesn't matter how much money you make, but how much money you save. Let's say you are a successful lawyer in California and earn $1 million. How much of this are you going to take home? Only $532,382. Your total income, federal and state taxes are 46.7%. You literally give half of your money to the government. And when you have a mortgage and a car loan, you can barely make ends meet. Even on $1 million income, you live from paycheck to paycheck. That is why at the end of the day how much money you can keep after paying is important taxes and coverage of your expenses. Learn how to save money. If you lose that job, the government won't give you that $500,000 back you paid taxes. The bank will come after your house and car. But saving alone is not enough. 4. Learn how to make your money work for you. Having a lot of money in your bank is useless to some extent because money it is a resource and the resources are meant to be used. The only way out of a rat race is to have enough money for you with it you don't have to work another day. It's not about lying on a couch doing nothing, it's about having the freedom to do anything you like to do it. No matter how much you save, you will eventually run out of money. This is why you should make your money work for you by buying assets. Keep this in mind when we talk about assets and liabilities. An asset can be anything from a rental property to a government bond. Investing in any way is simple and straightforward. In practice, however, it is a little more complicated. Stocks don't always go up, not all homes rent easily, and government bonds it can have a lower rate of return than inflation at times. Learning how to invest in order to get a high enough return is an art in itself. 5. Keep your credit score high. You've probably heard that you need money to make money. And that is true. Achieving a 5% return on $1,000 a year is only $50, not enough to get you a pair of Nike shoes, but 5% in $100 million is $5 million, enough money to live like royalty in every corner of the world. Debt is an important financial tool. Those who have mastered it have made fortunes out of nothing, and those who are deeply in debt ended up bankrupt. It's up to you which side you want to be on. Of course, you can work and save every penny to buy a home or be good with it 30 years later debt and get a discounted mortgage now. The first step to financial responsibility is maintaining a high credit score. The easiest way to do this is through credit cards. I know you may have a negative opinion about credit cards because you had to pay incredibly high interest rates because you didn't pay your credit card debt on time. This has happened to a lot of people, but if you are financially responsible, it is not how difficult it is to pay off your debt on time to avoid the extra interest. Now, could you say why use a credit card when you can use a debit card? Well, in order to build your credit score, you need to take out credit and repay it on time. You can basically use a credit card to pay for the things you pay for with a debit card, and at the end of the month you simply pay out your credit. This way, your credit score increases. So next time you need to take out a mortgage, for example, banks consider you a financially responsible citizen and offer you a better mortgage rate. Imagine how much you will save even if you get a slightly lower mortgage rate. Like it or not. You need to learn financial literacy to a certain extent, because even if you hate money, you can't help it, and money will always play an important role in our lives. So first start with at least mastering the basic skills. And now it's time to approve this video if you enjoyed it and got subscriptions button and bell too if you want to see more similar videos. Thank you for watching us and see you next time.